our presentation here. Okay. So today, our learning objectives are really to understand, the role of cooperatives and opportunity development co-ops in local economic development. So we're going to talk a little bit about what makes local economic development unique, and how raising capital and how it's controlled and where it is directed can create better local economic development outcomes. So that's how we're going to kind of frame it. And we're going to talk a little bit about the development pathways for moving forward. I think in general, whenever we're learning or co-ops, training and education is a big part of being a co-op, but often, what do we do with that work? So I have some suggestions here that you could apply as soon as you end this webinar or tomorrow morning. So definitely a call to action that's there. Okay, so just a quick primer on local economic development. If those of you you might be working in the space, or you may have seen this before, and definitely, co-ops are situated, as a vehicle for localizing the ownership and control of assets. But often when we think of economic development, we can see, outside groups leading it. Maybe it's our municipality, maybe it's the provincial government. But really, we want to frame to say, how do we retain and control benefit? How does economic activity create, better communities? So increased opportunity. How do we build communities that are a great place to live and work? Often, some of the communities we live in might face unique challenges, right? A lot of rural communities are seeing out-migration of people and capital and resources. Economic development is going to need to be framed to solve these challenges, right? What goes into those types of strategies that might be unique as well? We have to understand that your approach in your community might differ from a community down the road, or in an urban center, or in a different part of the country. So local is really important, and definitely as you're developing your own investment strategies, this local piece will come to bear on another part. The other piece that we can think about it is some of the assumptions around local economic development is that a dollar spent at a local business is going to stay and do more in that community, right? The profits from that business are staying in the community, the local tax base, local jobs. Local businesses tend to do things like, probably give back more in terms of charities, supporting local initiatives, things like that. So we can see, again, localization of economic development, local multiplier effect, and some of these other levers are unique to a local strategy. So that's, again, the foundation. And I think this idea of vibrancy, a lot of communities have this vibrancy. It's places where they're a going concern. It's a great place to start a business. It's a great place to get involved in your community. How do we foster that through economic activity? So something to keep in mind, and really just to say, well, like, why are we here today, and what's framing our strategy? So moving along, co-ops, as you may be aware of, are enterprises that are democratically owned and controlled by the people who use them. They follow 7 cooperative principles. They do lots of wonderful things, but that'll be a webinar for another day to go further into depth there. But I think that co-ops are, it's a limited liability corporation. However, they do have unique features that, based on their ownership and governance model, are a great fit for local economic development, and I think economic development in general. I think because they're created to provide value back to the member, that it's about the people rather than solely just maximizing profit. Co-ops tend to have they're built for the long haul, so they're very robust. The type of financing decisions and the capital outlays can be very long term. And that fits well with when you're trying to build a vibrant community. Those things don't happen overnight, and you need the long-term planning to make that work. Often, co-ops are emerging in spaces where, government hasn't stepped up, private business isn't there. Maybe it's a new idea or a new approach. It's there again to meet the community. So often it's the first mover, and it's taking on a bit of risk, but it's doing something really exciting. And then last, I think a lot of you are probably familiar with this, is that ownership is really transformative and can be really powerful. How do we get people to think like owners rather than solely just, say, consumers or or producers. So any questions about just co-ops in general, local economic development? Okay, I guess I'll just move along then. Oh, I see some in the chat. Yeah. Okay, great. Long-term thinking and how we help with horizon issues, and how big is local. Okay, so the long-term thinking, yeah, that's, I think, being able to communicate the value of the investment. That often, if we're looking at a private corporation, they're concerned with, say, quarterly profits, and maximizing profits in the short term is the key incentive of, say, a corporate structure. If we're looking at the longer term, we can consider, how long will it take to meet this need? What are the member expectations as well relative to, being able to have the co-op in their community or be involved in local economic development, and balancing that off with the financial return. So for instance, if you were investing in a project, and this isn't exclusive to cooperatives, but the investors might not receive a dividend in the first year, right? That's not uncommon in terms of investing, right? So understanding that the proceeds, maybe the dividends are coming later, but at the same time, the investments are being made, and we're seeing the progress in our community. So I think it's tempering the expectations of the investors over the time horizon. And then how big is local? That is a really great question. That's kind of defined by the communities. And often I've seen groups where it's communities of interest that are kind of directing that piece. Often it's saying, what is not local. So if we're thinking, is it provincial? Is it regional? Is it a municipality? Is it your neighborhood? It's going to be dynamic, but I think it's important for the group to put some terms around it. But if we're looking at local investing, often local is directing capital into a specific area. So whether that's a town or a municipal district or a region, what the Securities Commission, in terms of who can invest in localizing the group of investors, is Alberta residents. So that's that other piece that's through it. Anyway, let's jump into the co-op stuff so we can move through it. We could talk about local economic development all day. It's one of my favorite things. Okay, so again, a lot of you who have seen these presentations have definitely heard about the Battle River Railway. And I think that this is just a great example of local investing. Here in, in the area around Camrose, Alberta, kind of central Alberta, Badlands area, there was a short line railway that was owned by CN. Apparently, they provided terrible service to the farmers in that area. And in around 2008, 2009, CN felt it wasn't good for their shareholders, and it wasn't good for their business model to own a short rail in Camrose, Alberta. So they said, well, let's sell it. And that's great if you're CN, right? However, if you're a farmer in Battle River, or if you live in that area, you would be impacted. And so they looked at, how could they address this issue? All the farmers saw that the absence of the railway meant that their their transportation costs and access to markets would be impacted adversely. And how would that impact the broader economic capacity of the region? So they looked at an ownership model that the community could buy it, and they were able to look at raising about $3 million with both a combination of farmers who were using the infrastructure, and then, as they say in Battle River, people who just liked hearing the whistle blow. But really, the idea is that they had identified an economic asset that was really foundational to their work and was important to the overall strength of their community. Now, in terms of investing, as I mentioned, like, the finance department at CN was probably saying, this is not a good investment, and a lot of financial advisors would probably share that sentiment. But if you lived in Battle River, or if you farmed in the area, you were looking at this investment a lot differently in terms of the return on investment was not just the viability of the railway. However, how did it was a broader picture. The value of the investment also had an opportunity cost, the loss of the asset, as well. At the end of the day, it did show, they were able to show that local investing could work, that they did make it a viable business. They provided excellent service to the farmers. The local ownership also allowed them to understand the needs of that market, so it wasn't looking at the broader network of CN. It really just had to meet the members of Battle River, and really focusing it in there and being an excellent co-op. So the reason I mentioned Battle River, I think trains are very cool, but also it shows what makes local investing a little bit different, what might initiate it, and also when we think of what's the purpose of this co-op, and the purpose of this project was to create economic benefit. They did that by owning a very important asset. And anyway, but for the sake of time, I'm going to kind of skip ahead as we get into it. But Battle River is one of my favorite examples when it comes to local investing. Not that here to pick all the favorites, but okay. And then moving along, so a recent example is in Calgary, a local investing YYC. They're an investment cooperative and opportunity development co-op that raised just over $500,000. And what they did is they wanted to support businesses that were doing well and doing good. So they had a triple bottom line, and that were interested in providing an opportunity for people in Calgary to be able to invest in these businesses. So they raised $500,000 with about 45 members, and they bought equity in Fiasco Gelato, and then they provided loans to Lowen's Cosmetics and Bifco, which is a really innovative building company here in Calgary. So here, the example again, like a volunteer board came together to understand what type of capital needs do small businesses doing interesting things in Calgary require, doing the due diligence, building up the offering documents, and understanding what Securities Commission rules they needed to follow, and from there identifying people who finding the members and raising the capital, investing in these businesses. So again, here's something, it's kind of the other end of the spectrum compared to Battle River. It's in an urban setting. They're looking at investing in debt and equity in a group of businesses, and it's a little bit different. But at the same time, the guiding principles are to drive economic development and to build some vibrancy in their communities. So these two examples, and there's lots there's probably across the country about 60 examples of some form of co-op local investing. And, these are great case studies. And in terms of getting started, I invite you to check some of these out and learn more about them. Okay. So now we're going to talk about kind of the nuts and bolts of what we're getting into. So an opportunity development co-op is a for-profit co-op that's incorporated under the Alberta Co-operatives Act. And I'm going to go a little further into what makes them unique as a co-op, and to understand what you're getting into as you're pursuing this type of cooperative. So as the definition, this kind of loosely, that they're created to raise capital to provide a social and a financial return on an investment. And basically, it's a local co-op that is there to raise capital to drive economic development. They typically are formed by a volunteer board of directors. Often that's a necessity. It's a startup, so often everyone's a volunteer in these types of situations. As well, I'll talk a little bit more of how that, in terms of raising capital, why a volunteer board is important. The sport that you're playing is you're in the exempt market, the sale of exempt market shares, and that's regulated by the Alberta Securities Commission. So that's kind of the industry that you're in, and it's, as a board, you're required to follow those rules. Some of the things that we look at in terms of being an opportunity development co-op, and these things might change as they grow and become, larger, and maybe are doing other activities. But really, you're trying to get greater participation and community buy-in by getting, people in your community to be investors, to invest their private capital into local economic development, and really under the assumption that when people, think like investors or behave like owners, is that they're more bought into their community. It's a really profound way to get involved. Some of the other features, we're looking at typically to keep when we look at exempt market, and the sale of securities to raise capital to finance projects or for business development, is that typically you do have an exempt market dealer that requires a lot of registrations, compliance costs, and definitely playing in a much more in a different field where you're managing a fund, and your job is to earn money for your investors, and that we're looking at, are the co-ops, although they're in this space, they're not being registered, and they're not in the business of managing a fund. They're really looking at one project at a time, and I'll circle back to some of those things around it as well. Some of the key features about an opportunity development co-op is that they're kind of meeting two needs in their community. So one is that they're offering a local investment product. I can't walk into my Service Credit Union or First Calgary or Vision and or talk to my financial advisors and ask, can I buy shares in a local business, right? Those products don't really exist. So it's offering that, and as well, again, kind of thinking of the example of Battle River and pretty much any of these types of opportunity development co-ops, is that there's a need for local capital, and often it's, we think of small businesses, if they were to raise equity, that's pretty much cost prohibitive. If we were to look at this type of local investing, or providing loans at, that have terms that are favorable for the types of businesses in your community or the types of projects that you're tackling, it might not exist. So it's kind of meeting those two needs, and that's really driving it. The members are investors, so you're kind of an ownership group. You're stewards of local capital that's going to be invested in your community, and members have a Class A share to vote for what the co-op does, to run for the board, to participate in the business of the co-op, which is raising capital and investing in projects. So typically, these types of cooperatives have your Class A, your voting non-par membership share to join, and then you'll have investment shares connected to the projects you're investing in. And really, the typically is that each project is separated out. That's kind of, again, just some of these features of these types of cooperatives and what you're getting into. Okay. In terms of the types of investing that opportunity development co-ops do, and when we're looking back at these themes of local economic development, it might be Main Street development. If we're looking at having some funding to generate some activity, so that could be buying up businesses on the Main Street, and the community is then able to control, or be more active in terms of the cost of businesses that are able to locate there. Maybe they're able to, by owning the business, the buildings, on Main Street, perhaps they can offer favorable, lease conditions that make it easier for local entrepreneurs to get started. It might be less cost prohibitive as well. There are a lot of building owners, property owners that are sitting on properties and they're not investing back into the community. So what would your community look like if you had more vibrancy on your Main Street? So sometimes we've seen examples of this type of approach. And again, where it also fits with the kind of the co-op piece is being able to pool a large amount to be able to make a big impact in that space, raise a lot of money and deploy it there. When we think of things like business succession, that's with baby boomers looking to retire and sell their businesses. What is that going to do in terms of the local economic development picture in your community? Is having a local pool of capital that is a little more dynamic, that has these economic development goals. Can they be a partner to help with this transition to a new ownership to maintain local ownership? Is it an opportunity for an existing business that's a going concern to be able to grow, right? And definitely, being able to raise equity could be a strong piece of that. Maybe it's buying equipment that can make them more productive, scaling, things like that, right? It might be new business development. It's definitely a bit riskier, but something to consider. We're also seeing, in terms of the scale of some, large infrastructure projects. We think of Battle River Railway and purchasing, the railway. We can see parallels in terms of internet, renewable energy, transportation, distribution. A traditional lender or a private business might not be able to take this on or see really the long-term benefit. However, a group of people that are impacted by it, that live in the community and will benefit from it, are going to have a different motivation to get involved. And if there's enough buy-in, if the board has done their homework and the due diligence to see that it is viable, this could be a worthwhile plan. Having a group of investors who support it will be the key feature to making this move forward. So again, just kind of what is an opportunity development co-op? These are some of the activities that they do. Just some of the themes to look at, and as we're saying, what are we doing in this space? Really, we're focusing on how private capital, where it's deployed, and who is making those decisions, and that they live in the community. Will impact your economic development outcomes, right? We are looking at in the securities, benefiting from a type of investing that's often, only for very wealthy individuals. So we're creating a safe and secure mechanism, a locally controlled co-op that is able to do a type of investing that typically, the average Albertan isn't able to be part of. But when we think of our communities, they tend to be made up of lots of average people. The RSP and TFSA eligibility, I'll get into that in a second, but that's also this idea of being able to access larger pools of capital. And often, it is a way to get involved in your community, that you are looking at doing local economic development in a different way, but it does require some strong leadership, good understanding of the local context, and in it for the long time. So just some things again to understand what you would be getting into in terms of forming these types of co-ops. Okay, so very briefly, I'm just going to talk a little bit about the type of investing. So exempt market shares. So these are shares, are a form of securities that are not able to be sold on a secondary market, that they're really raised to be invested specifically into the projects with a group of investors. And there are, some of the key things to consider is that, this is risk capital. These are our for-profit co-ops, and people who are participating need to understand that they could, that nothing is guaranteed in this life, as well as an exempt, being part of the exempt market, is that there isn't a secondary market to sell these shares. So if the value of the shares, or if the business, if the railway, hits at difficult times, those members can't sell those shares on a stock market or on a secondary market to exit. So we're really thinking of what's the exit strategy, definitely the terms of the investment. The lack of information is off, what's the amount of disclosure, and that people understand what they're getting into when they're investing, and that these tend to be longer term investments. So really, co-ops are owned and controlled by the members. That your co-op will have these same features, but these are some of the things to understand. Also, local investing, it tends to be a bit new. It's not super common, and a lot of people aren't accustomed to investing in this way. They might be used to meeting with their financial advisor. Maybe they invest through mutual funds or something that's, there aren't a lot of options this way. So there is a lot of member education just in this type of investing that goes into it. And as someone who's, if you're looking to form one of these cooperatives, education and training and awareness are some key pieces that are part of it. It's also a great way to engage your members and engage your community. As people are learning, about this type of approach, they'll be more comfortable to be involved, or and more likely to invest. Just again, so in terms of the exempt market shares and all this information, again, I'm just kind of going over it pretty quickly, is that you're using exemptions that are listed under National Instrument 45-106. The Securities Commission has listed, has more information about what these different exemptions mean. And basically, some of the key pieces, they're going to be connected to how much money is being raised, how many people are raising it, and the size of the shares, as well as how much disclosure is required to be provided to the investor. And really, the Securities Commission, they're looking to protect the investor and making sure that the securities market is fair and equitable. As you're raising capital for your project, you'll be looking for the exemptions that fit well with your project. There isn't a one size fits all. It's going to be understanding, what's the project in your community, how much capital does it need, and then which exemptions will work best to be able to sell the shares and bring those together. Typically, you're looking at avoiding the registration requirements that having to register with the Securities Commission as a registered dealer adds a lot of costs to your project. And when we're thinking of trying to keep, the cost of raising capital low, often these are projects that are going to, not have massive returns. They're going to create enough of a financial return, but really, we're trying to keep things pretty thin. So registration could be cost prohibitive, but it'll depend on the size of your project. Some other things to consider is that really the Opportunity Development Co-op is often thinking of it like as an ownership group that is directing capital. It's not in the business of making money off of selling shares. It's really there to create economic development goals. So some of the things to consider, you're not selling these shares to earn a commission. So that's a part of the feature, and again, a part of being a volunteer board. The co-op governance, when we're looking this at one member, one vote rather than $1, one vote, does add a high level, a higher level of oversight and security that comes together with it. In some other jurisdictions, the co-op sector is almost self-regulated when it comes to raising shares. So again, just really, this is just generally for information that the type of security you're going to be raising is listed under these national instruments that I have mentioned. And really, you're going to have to figure out, how to be compliant with that. This is definitely where a securities lawyer comes into the equation. Another thing you might want to consider is also community bonds. That's definitely a whole other presentation, but I have put some information, a link there, and I'll also be sharing the slides if you want to follow up around that. So this is definitely a big understanding, how the exempt market works and which exemptions will fit with your group is going to be a large part of the work that you're getting into. So I really, just to bring it to your attention, and I don't want to go too far into detail on this side. Okay. Another thing to think about though, when you're raising capital, is that it is, although it is a security, and often people will see it as a stock like that they could trade, or something that like stocks that they buy on the Toronto Stock Exchange. I'd say it's more like an ownership group, a group of owners that have invested into a project, or are in partnership with local businesses. It slows it down. We could think of, if we own shares in part of an employee share ownership program, shares in a private company, things like that might be more comparable than just saying, well, I'm buying shares or stocks, and that'll be again part of your member engagement, and really saying, we're looking to pool some capital to invest into local economic development, and accomplishing that by supporting local businesses. Often, when we look at raising equity, that might also allow your groups to leverage other forms of financing, whether that's access to debt, other structures there. So really you're stewards of a pool of capital that's raised by the people in the community where you live. Okay, so very briefly, these are some of the phases in terms of the development approach that we're looking at to start an opportunity development co-op. And the first phase, I think, like most things, is that these aren't going to be linear, that you're going to see some interaction between the phases, and phases 2 and 3 kind of coincide at the same time. But I find, like, you're going to be hitting these key milestones, and we'll have, really, when we think of the early phases, is that you have enough information to be able to make the next step, to be able to, what you're getting into, and your local context. And as you're developing your cooperative, it's always important to be up to date on what's happening with the Securities Commission, what's happening in your community. So again, it can be a bit iterative. So the first phase is you're understanding the local needs. Maybe you're creating a learning plan to be able to build that capacity of what do these co-ops do, what are the local needs, and how are you going to raise and deploy capital to be active in this space. The second and third phases are all about getting the right people on the bus, developing the terms of reference for your cooperative. What are its goals? Is it feasible to be able to raise capital and invest in these local businesses? So is there the deal flow? Will they generate enough revenue to repay a loan? What do the terms look like? And then also considering, how does supporting local businesses or investing in infrastructure, how does that accomplish the goals of the co-op, right? So there's a lot of kind of high level strategic thinking, as well as the process of taking those broad ideas and incorporating them into your corporate documents and being accountable to that mission. As well, in those early phases, a lot of groups are looking at how to develop a criteria of where they're going to invest. There's plenty of opportunities in this province, but which ones will create that type of return that you're looking for, both financial and economic development. With that, as you're creating the corporate documents and the limited liability corporation that makes up your co-op, you're also developing your first offering, and that's the Class B investment shares. You're going to be looking for a trustee. There's a number of technical experts you're going to want to involve. You're assessing the investments you're looking at, and developing basically the offering documents to sell the shares. And then the fourth phase is you're going out and you're raising the capital. So I'll go a little bit deeper into some of these. So the learning plan, actually that should be phase 1. That's this is something that you can start on right away. One of the key things that you may want to explore is the process of accessing RSP and TFSA eligible shares. Again, this could be another learning opportunity, but the process of which co-ops are able to offer RSP and TFSA eligible shares is through a program offered by the Canadian Worker Co-op Federation, and I've posted the link to their process. So if you're part of an investment co-op at the moment, or you're looking to start one, understanding how to access RSPs and that piece is something that you could start this week, and building capacity as part of it. I think staying curious, talking to people in your community, understanding that need is definitely this kind of first part of your development phase. So exploring, getting inspired, and definitely feel free to reach out to ask questions, or to look at other examples. There's, like I said, there's about 60 co-ops in the country that are doing this type of work in some way, shape, or form. There's a lot to be learned from others. The second phase, I was giving this presentation in Kalmar the other day, so I had to have an Oilers. And then when I'm doing this presentation in the South, it's always the Flames. But I'm a Canadiens fan, so that's when I think of a strong team. The 1970s Montreal Canadiens are, you can't think of a better example. But basically, what is the champion team in your community? And I think often a lot of you have these expertise already. But this is the work in terms of identifying, what's the purpose of this co-op? Who are the right people that are going to be on the bus? And so really it starts with the board of the champion team. And you're trying to look at, assessing their skills in terms of governance, leadership. Do they have, are they subject matter experts? Are they experienced in doing this work? You can assess those skills. A lot of these skills can be learned. I think board governance is something that is an amazing tool to be a great co-op, but not everyone knows how that works. But there's some resources, and I'll share one in just a second, where you can build that. You might look around the table and say, there's some skills, we need to find another person. So taking stock in the quality of the team, and looking to recruit others or build those skills through training or mentoring is something that you might need to initiate. I won't get too far into this, but the board really, as you're getting started, you're understanding the purpose of your co-op, and then getting that team together, and that will take some work as well. The other function in terms of identifying what's the purpose of the co-op is developing this investment criteria. You might also want to do a bit of a strength, weakness, opportunities and threats, or SWOT analysis, to get a sense of your community or the SWOT analysis for your co-op. And at the board level, people that can have some in-depth conversations about strengths and weaknesses, and then saying, okay, based on this analysis, what do we need to improve on to be able to accomplish these goals? A really great resource. And a lot of groups that we come across now, I recommend this board governance. It's a free online course through Co-operatives First, and they sometimes offer it where you can be part of a cohort, or you can do it on your own. You could, this might be, you could say, if you want to be on the board, take this course, and it's free. It's a great resource, and that, again, an opportunity to start building some capacity, building some momentum towards forming your co-op. As I mentioned earlier, so this is really kind of the key function in the development phase. So you're taking what's the purpose of the co-op? How do you want to work together? Who are your members? What are you going to accomplish? And putting that into the corporate documents, into your articles of incorporation and your bylaws. So what your co-op does, and the bylaws informing how you're going to do it, and ensuring that you have strong capacity that's going to help support not just the board that you're forming today, but the next board, and looking longer term. So you want that reflected in your corporate documents. These are things that you can create on your own. We have some templates. You are forming a legal person, a limited liability corporation, so you will want a lawyer to sign off on this and work through it there. Along with the corporate documents, you're forming your first offering document. So as I mentioned, that's really the investment. Are you investing in the railway, or is it a group of businesses? Is it high-speed internet? And this document will include the risk disclosure, all of the financial information, how much is being invested, how long are the terms of investment, what are are you lending money, are you buying equity, is it a Main Street development, who's on the board, all these pieces that will go into it. And again, I can share some examples of what these look like. And this is something that you will create with your team, and again with a lawyer that has some experience in this. The other things to consider in this piece are the registration. So are you using RSPs and TFSAs, finding a trustee, and working together. So again, this is something that you're getting into on this adventure of local investing. Again, you're really going to want to look at these are some of the costs that are going to go into getting started. So the technical experts, as well as some of the administrative costs, things like insurance. Depending on what you're investing in, you might need some subject matter experts or a third party to be able to evaluate what you're investing in. Again, this is the due diligence that you'll want to rely on and be communicated in the offering document when you go out to raise the capital, to say, this has been vetted or this has been assessed to the best of our abilities. And if we require some third party assessments, that they've been conducted. You probably want to break down your feasibility into the development. So looking at, the cost of incorporation and understanding your strategic direction, the development phase, looking at budgets around raising the capital, and then the ongoing costs of operating your co-op. So what will the cost of the next raise be? What are the administrative costs bringing them together? You want to form some work plans and some budgets that will be connected to these. And when you're thinking of getting started or forming your board, the capacity of people to be able to carry out and get organized and be accountable to these work plans is going to be a huge resource to your group. Also wanting to think about, as you're looking at these costs, where's the funding coming from? Whether this is from, if there are grants that are available. There's an investor readiness program that I'll share the link to when I send the slides. If it's the founder shares, if it's recouping those development costs through the raise, and really, having budgets. So where's that revenue coming from? Sweat equity comes up quite a bit in terms of the feasibility, and I think often you will be doing a lot of volunteering. Sweat equity, depending on how complex it is, it will be viewed by the CRA, so something to consider. But if there's, this might be something we can follow up with, or if you have questions about it, please reach out. Okay, just as we get it, looking at raising capital. So the fourth phase. So you've created your co-op, you have a project, you have an offering document that you can go out to the community to sell the shares. How are you going to raise the capital? So it is a long process. It's a long process to form it, but in terms of the member engagement and the education, is that people might not be ready to write you a check right away. They might need some education, again, to understand what they're getting into, as well the process of understanding and when they'll be engaged. But also, if you're in a small town, people might be hearing about your project from the get-go. So there are lots of points of contact that you can get together. It's good to get organized in terms of understanding, who is that prospective groups. We look at, Battle River again as an example. There was a built-in group of investors. There were farmers who really were connected to the project. You might have to do some market research for your own project, understanding, are they eligible to invest? Can they afford to invest? What's their risk tolerance? Understanding, who the potential investors are, that's starting to give you some feedback and insight on your project. I think there's a lot of storytelling that goes into it, and a lot of opportunities to share, what your co-op is doing, and really building, getting people to share that vision and to invest and really to connect them through there. So that's if there's any marketing or communications people on the line, this is definitely in your wheelhouse. I've kind of covered off some of these things, and I want to get to your questions, so I'll just wrap it up here. But basically, you're building capacity to pursue local investing. The founding board is really tasked with looking at these broad economic development goals and focusing them into how local investing is going to accomplish those goals, right? You're responsible for the due diligence, for ensuring you're in compliance with whatever exemptions you're following. That might require, delegating tasks. It might require hiring some technical experts. You're tasked with raising the capital and really being, a champion in your community. So it is, these projects tend to take about a year, and it is a lot of work, but it's definitely worthwhile. Local capital is a key feature for building strong communities. So this is a great, venture to pursue. I think, I've definitely covered off on some of these things. Having a strong team is going to be a big part, and that's something you can get started on right away. The purpose of these co-ops is to invest other people's money. So how do you do that safely and securely, and building up the capacity, the strong team to be able to do this, and moving forward. In terms of getting started, you can register for the co-op governance course right away. I think developing a learning plan, getting a sense of, what are these key questions, and we'll review some of them here in just a minute. And again, understanding the local context and the work that you're going to get into. Okay. In terms of learning more, so here's my contact info. If I don't get to your question over the webinar, please, let's set up a time to chat. We're going to do a bit of a town hall, so we'll have a lunch call where I will do very little talking, and just to really hear from what people are working on, sharing what's working well, what challenges, or some of those key questions. And if you want to learn more about ACCA, you can check out our newsletter. So that's about it for me. I'm going to try to get through as many questions as I can at the moment, looking at the chat. So thanks to everyone who wrote in. How's this open? Okay. Okay, so is there a limit to the number of member investors an ODC can have? That'll depend on the Class A membership shares. Those can be specified in the bylaws in terms of having, limited or unlimited amount of Class A shares. However, the investment shares, and those might be limited in terms of the size of the investment. So if it's $1 million, it's 100 people at buying $10,000 worth of shares. That might be the cap, as well as the exemptions might have some language around the amount of investors. So this is something, again, like you'll want to get some legal advice on this, and that'll be developed into the project. How can we better collaborate? I found people. Okay, so in terms of collaboration, that'll be February 5th, and we'll use that as part of as a feature. So looking at maybe quarterly calls. We'll also, if you're a member of ACCA, we definitely share about your group's work, and I think that there's lots of ways that we could create a platform to be able to share information, really focus on this work here. ACCA updates can be found at the newsletter. Okay, is it better to start with a specific project or raise a pool of funds and then find a project? I think that, yeah, this is definitely a bit of a chicken and egg situation. So having either a specific project or raising a bunch of money and using that to attract opportunities. I think it's really going to depend on the group. What we found, I think, is that sometimes a group, you could get started and raise the money, and if you don't have a project, what's happening with that capital? Is it earning a return? It's going to be hard to engage those members if they've bought shares in something that isn't being invested. So I think it's important to have the deal flow that's developed. Maybe it's through the investment criteria to say, well, we're not just going to raise the capital and wait. We have a group that we're narrowing it down, and then we'll be able to invest in these. But again, that might be more into the operations of the co-op and looking at those options. And yeah, maybe we can talk more about that another time. Okay, how do you make the benefits fair for all members when there is a wide range of contribution? Also, dividends for members as worker contributors versus members as customer service users. Okay, so in these co-ops, these types of co-ops the members are investors. So the benefit is typically on the financial return is kind of the key function, that this co-op has invested their members' money into a local business, and they're getting a return back to it. So the fairness is really it's based on however many investment shares they bought. Where the fairness though is, I mean, it's one member, one vote, not one share, one vote. In terms of the contributions, when we're seeing in the development of the co-op, where, like in any group, not everyone's contributing equal amounts. People might be doing different types of work and coming to the projects at different times. So often it's a bit of a policy around how that's reflected into their participation. You definitely want to be keeping records of people are paying for things out of pocket and recording that. But again, I don't think that it's going to depend on the situation and really understanding like what's the purpose of the co-op and the benefits that are retained there. But Robert, if I haven't answered that question fully, I'm going to try to get to some of them as we wind down in the next 5 minutes. But please send me an email and we can follow this up further. Okay. If ODC investors must meet the requirements of sophisticated investors where minimum net worth, yeah. Okay, so this question around sophisticated investors, again, so you're trying to hit as many of the eligibility requirements. So you're kind of starting a sophisticated investor, who has a high net worth. It's very easy for them to participate in these types of co-ops. If you're trying to expand it to lots of more people, that will be reflected in the exemptions you're using, as well as the amount of disclosure that's required to be connected to it. But what these co-ops are trying to do is to use exemptions that will allow for maximum participation. If your community or if your project, if everyone is very wealthy and the quickest way to get the project done is focusing on sophisticated investors, that might work. If you want to have broader community buy-in, you're going to have to look at exemptions that will work with larger groups. Okay. Can shares be sold for a generic investment? How can the ODC be used to raise funds which will be invested into a PACE investment? Okay, so this question, I think it's going to take a little bit like securities expert might want to weigh in a bit more on this, but I think if you, in the offering document, if you're having the clear disclosure in terms of what you're raising capital for, and the pro forma financials are connected to it, it could be connected into a PACE investment. However, I think, to explore it more, when I think of the other projects and the way that they've raised capital, I couldn't see why it wouldn't be a fit. However, I think maybe this is something to look through the technical expert who's in this field. So maybe we have to follow back to this one just with a little more detail. Okay, what advisors could be involved, or what sort of skills? So the main skills are legal, accounting, and finance. So for the legal, in terms of the incorporation, maybe as well as a securities lawyer, they're often the same person. You want some people with financial expertise in terms of being able to get a clear idea of the performance of, or the expected performance of the investment, to understand, how are you going to repay the loan, or what's the expected dividends, being able to get a sense that way. So that might be a committee, of the board, or someone who has the expertise in that. So, and then in terms of your ongoing administration, if you have a bookkeeper or an accountant, to be able to bring that together. But legal, accounting, and finance are key pieces. I think some of the other skills that you're looking for are, strong board leadership, people who can make effective decisions together, that have experience in business development, or at least enough that they can weigh in on the projects that they're looking to develop. So that's a key piece there. Yeah, so the trustee, yeah, a legal entity. So law firms have been able to hold the funds in trust. Credit union can do it as well. In terms of the Alberta Investor Tax Credit Program, uh, what options are available moving forward? That's to be determined. Unfortunately, the tax credit program has been lost. Um, that's something that we're in looking to follow up to see if there's going to be something else that could occur. But I can't speak to the tax credit programs, although I miss them dearly. It was a good boost for this type of work. Okay. All right. Sorry, I just okay. Brian, I might circle back to your pace conversation here just in the sake of time. I see it's 1 o'clock. So I want to thank everybody for being here on the line, and as well for providing your questions. If I didn't answer them fully, please feel free to drop me a line and I'll do my best. You will be receiving an email shortly with the slides as well as a short survey. I'll put the recording on the website once I get that figured out. And again, if you're interested in the ODC Town Hall, just send me an email and I can send you the details for that as well. I want to thank everybody for sharing your lunch hour with me, and it's really great to see this interest in local investing and what we can do next. So thanks again, everyone, and we'll be connecting soon. Take care. All right. Thanks, Brian.